Hey, great afternoon. Thank you very much for joining us. Now the next speaker, we're going to talk with Ken Miller, the CFO of Juniper, which I have prepared a long list of questions. Hopefully I can cover them all. As you know, I've been following Juniper for many, many years, and it interests me always how this market is evolving. I want to refer you also to our big report on white box routing that we put out recently, and also the call that we hosted that covers kind of some of the next gen trends in the market, and I'm going to be talking to Ken about it as well. We also have on a quiet mode Jess Lubert, the IR, and I told Jess that he's very happy. I'm very happy for him that he moved to the other side of the fence because he doesn't need to do all this II thing anymore. So with that, I would like, first of all, welcome Ken to our call. Thank you very much for joining us.
Thank you for having us.
Thank you. So I want to start straight from the core issues. I want to ask you about half of your business, give or take. Routing has been declining. The market, this is market data, the market is flat to down for the past 7 years on average. Do you think this could change, and what could drive a change?
Yeah, so that's a great question. I do want to note that Manoj, the Lenny boss, is on. Manoj, you're there, correct?
Hi, guys. Hi, Tal. Yes. And hi, everybody. This is Manoj Leelaniwat, Chief Product Officer.
Thank you, Manoj.
Can you guys hear me all right?
Yes.
Yes, perfect.
So from a routing perspective, Tal, I mean, there's a few things going on there. I mean, there's a lot of things going on, obviously. You really have to break it down by vertical, and I'll take the first stab at this, and then Manoj could add some more color. But routing, I would say the opportunity for us in service provider is about diversification, right? If you continue to sell core and edge routing to the same set of tier one customers, that's going to be a declining overall revenue market, and that's kind of what we've seen over the last few years. The strategy to offset that decline is really diversification, more tier two, more tier ones in other geographies, and product diversification, not just reliant on core and edge, but really expanding into the metro and the access layer. So there's diversification going on in SP routing, and that's how we turn that back to growth. 5G is the longer-term growth driver, which we are obviously ramping up for and expect that to pay off for us over the next several years as well. But really it's about diversifying on the routing side. Cloud, the numbers are a little bit misleading in the overall routing because cloud, we've gone through, as you know, a pretty significant product transition where we've gone, 30 cents on the dollar from a price per port perspective. That transition's behind us. We've seen our cloud routing business return to growth over the last 4 quarters. But if you go back the last couple of years, that's been a pretty significant headwind to our overall routing results. So again, cloud routing should return to growth now that we're kind of through the product cycle change that had a very, deflationary impact. Service provider routing, the strategy is diversify, which should get us back to, better results in the service provider routing side.
Got it. And I'm gonna ask my questions, and Manoj, feel free to jump in if you want to add more. I understand what you're saying about new target markets and about kind of the transition that Juniper Juniper, not the market, went through in terms of cloud. But the numbers that I quoted are total market numbers. And the question is, how are trends like SD-WAN or white box routing and other initiatives that are coming to reduce the value of routers, from someone that looks at it from the outside, right? How are these initiatives impacting the market size or market attractiveness for you?
Yeah, so Manoj, do you want to jump on that one?
Yep, I'll go ahead. So first of all, I think Kevin articulated. I think before we jump into the SD-WAN or the cloud specific question, I think the MX to PTX transition is largely behind us in the cloud segment, right? And we had significant port growth, but we had ASP declines, as you know, right? It's largely behind us, and now we've seen 3 quarters of year-over-year growth in the cloud segment in routing, right? So I think routing is on is coming back for us in many ways, and can address the overall diversification of the the other tier one service providers across different geographies we are going after now, more than the traditional North American Western tier one service providers. So that all of these are actually catalysts for growth for us. With that backdrop, let me address your specific question on SD-WAN and elements like that, right? We actually embrace things like white box, things like disaggregation very much so, because it actually improves our opportunity to go into adjacent markets and new areas which we are not playing today. Right? We can expand upon that in detail, whether it's, going on, ODM boxes or actually, working with programmatic interfaces like, external interfaces like Sonic, or even cloud-native versions of our routing gear going into routing software, going into a variety of different, external, devices. It actually improves our opportunity to increase the TAM which we can address. So we actually embrace the approach of disaggregation in a big way. So it's actually, we don't see it as a threat, we see it as an opportunity, especially in areas we're not playing today. And we can expand upon that depending upon where you want to take it.
I want to dig a little bit deeper. Cisco recently launched in December. They launched a strategy where, for the first time, they try to compete even on the merchant silicon market, right? They have their own semiconductor for white box routing, if I can call it this way, and they try to also sell the software only. What is Juniper doing in the market to address? Probably, if you just focus on cloud guys will probably develop their own software. We'll try to use also merchant silicon there. How are you going to address certain segments of the market within the white box phenomena, if it happens?
So I think Juniper has always been embracing disaggregation. Let me explain. Number one, I think, if you look at our systems, we can actually use, Juniper silicon in certain systems. Certain systems we use merchant silicon. So there are use cases where Juniper silicon differentiates, and there are other use cases where, merchant silicon is good enough. So we have our systems built in such a way that we can actually embrace any of these different opportunities in silicon. Going up, similarly, Juniper hardware versus ODM hardware or white box hardware, it's a similar thesis. Junos is our, fundamental strength, which is all about the software, which brings in the value. If you look at our R&D, 90% of it is in software. So all of the capabilities in terms of the flexibility and the software features are in Junos, and now Junos evolved. So we strongly believe that the capability of Junos on a Juniper system or a third-party system is what actually powers what needs to be done for the industry and the flexibility the customers need. On top of it, we've always embraced the programmability aspect. Right? We believe in openness, having programmatic interfaces, and providing the visibility and automation and troubleshooting capabilities. I think that is what is really powerful. It is less about the disaggregation between software and hardware. It's more about the abstraction of network via open and stable APIs. And those are the core principles we are driving. And proof point for that is the Sonic interface, which we allow hyperscalers to program our devices through the Sonic interfaces. So we are actually openly embracing this. In fact, we actually shipped a system based on white box quite a while ago, for one of our customers. And what we've seen in reality is, a little bit limited traction because of some business model challenges. And what are those challenges? If you look at white box, first of all, on the first blush, it looks like, okay, there is a possible CapEx saving. But if you deep dive, you find out that, there is multiple things you've got to do, right? There is software coming on top of it. Then there is system integration and testing that need to be done. There is supply chain management that needs to be done. Then how do you test the whole solution together, and how do you support it all together, right? So the OpEx costs get significantly hidden in the first blush. So many of our customers who have embraced this, felt like while the initial entry point in the CapEx may look a little bit smaller, the actual operational cost and eventually the time to deliver the service actually increases quite a bit, rather than getting everything packaged from a specific vendor or a system integrator. So we have seen both options. We are just keeping a very open mind to both options, providing all the flexibility and the programmability and the disaggregation needed for our customers. But in fact, in actual business reality, what we have seen is that even in cases where we disaggregated, our customers have come back to us and said, can you package them together? So that is what we're seeing today.
So if I take a step back just to kind of understand the dynamics of the market, the reason why carriers want to do NFV, and I look at white boxes as a special case of NFV, basically, to take it a step further. But the reason why they want to do it is to reduce the cost of routing, to increase competition, to mix and match between various hardware solutions. So in switching, it did drive price decline. When you look at what happened to switching, the same trends, not the same, exact same, but same concept, drove price decline. are you concerned that while the market migrates to these new initiatives, the carriers will basically get what they want and the price will go down?
I think from an overall perspective for Juniper, I think this is a good thing, not a bad thing, because it expands the opportunities into places where we weren't going, right? Because we were not focused on building, very thin margin, hardware elements for, various paths of the market, right? Whether it's service provider or enterprise market. This allows us to use the power of our software on top of a, very razor-thin margin, hardware solution if needed, right? So from a Juniper perspective, like I alluded to earlier, software really accrues values over time, right? Junos over the last 20 years has developed so many different capabilities that, all of the value of the Juniper system, other than the Juniper silicon, is predominantly in the software. So the hardware system, when you disaggregate, what we're seeing with our, flexible software licensing models is that the majority of the dollars is in software. So even in the white box scenario, which we are embracing, and as well as the open disaggregation we are embracing, we see a significant value of the whole system still part of software. So it doesn't threaten our business model in any way. In fact, it also opens up areas which, Juniper had a certain margin target as a company, so we definitely wanted to stay away from a certain kind of a hardware margins, opportunities in the marketplace. Now, this gives us an opportunity to play in those, opportunities, especially as we go deeper into the access layers, towards the cell towers and whatnot, those layers, especially going after some of the lower order enterprise markets. This actually allows us to put our software capabilities on top through Junos and Junos Evolved. And in cases where they want to have a separate network operating system, we still have the power of our containerized, cloud-native version of our routing solution, which is the best in the industry, has been battle-tested and hardened over the last 20 years, and we can leverage that. So we have various ways we can disaggregate in this level, and it allows us to actually increase our TAM on what we can actually look at. So the embracing actually helps us, not actually works against us.
Got it. Last question on routing. Can you talk about the opportunity you see in 400 gig and 5G? What kind of new markets or new opportunities does it open for you?
Yeah, so I'll start, Manoj, and I can hand it to you to add some color. So 400 gigs has obviously been a target that we've been focused on for a while, particularly in the hyperscale data center, insertion opportunity that we see. That is the next kind of obvious opportunity for a challenger to break into that market. As you know, Tal, we have a very strong footprint in routing. We have a good footprint in DCI or data center interconnect, and we're effectively not in the data center for the hyperscale customers. And 400 gigs, our target, that's the opportunity that we've been targeting for quite some time. Products are in market, new silicon, new software. We feel very good about what we've built. It's being tested as we speak. We've had a lot of good feedback. The timing is uncertain. We expect it to be probably early next year to start to see some deployments. And those wins will start to roll out, over the next few quarters. But we feel good about our ability to break in. The last thing I would mention is, from a business perspective, we do believe, based on, extensive discussions with customers, that they do want choice, right? They are looking for, not having a sole dependent, provider in many of their strategic network layers. So we think there's an opportunity, there's an appetite for diversification there, and we think it's a great opportunity for us.
Great.
I'll just add a couple of comments on what Ken said. Number one, on the cloud sector, right? I think as you know, we are in a very good pole position in the cloud routing, especially in the WAN use cases. And this actually allows us, being an incumbent there with the 400 gig evolution, allows us not to be just in the incumbent use cases, but also some adjacent use cases in the WAN. And we're seeing increased, exposure to that, which is actually good for us. And like Ken mentioned, there is also an adjacent space which we not played in significantly, which is the data center space. This 400 gig evolution really opens it up for us, and this is because our capabilities are, are absolutely one of the best in the industry. In terms of providing the capacity or the speeds and feeds. 14.4 terabits per line card can go up all the way to a 230 terabit system. The fact that we integrated security along with it, and have very competitive density and as well as power, which is needed for the industry and for the hyperscalers. So we're pretty excited about the opportunity with the hyperscalers. Similarly, the 400 gig evolution is also beginning to happen in the service provider market too. And all of our 400 gig solutions, especially what we came out with, we are having design wins both on the service provider as well as the cloud segments right now. So we are actually pretty excited about the path of 400 gig for Juniper as a company. And with respect to diversification, across our service provider and cloud customers, we hear one thing. They want diversified vendors, but they also want diversified silicon. So I think Juniper has the ability to offer both in some of the use cases we are not present today. So this, in fact, allows us to play in use cases which have never been before.
Got it. You mentioned 5G and you mentioned going into access for 5G. Prior to 5G, how do you describe your position in access, specifically wireless applications? And then going into 5G, where is the opportunity?
So I think there is a part which is evolution and a part which is a new opportunity for us. If you look at our security business, I think, for security gateway, GI firewall, high-performance firewalls, all of these elements were in the service provider network, especially in the mobile networks, 3G, 4G networks. And with the next iteration of those products, we are in a very pole position in 5G from a security perspective. So that's more of an evolution, but I think our incumbency really helps us. The place, again, our incumbency really helps us in how we're strong in our edge and core, but the area which we are expanding to is aggregation and access. And this is an area I think has been a focus for us for the last 2 years in terms of building stuff, and we are actually getting good traction in terms of expanding there. Last but not the least, we want to talk a little bit about our as the 5G infrastructure moves to the next generation. We have a strong telco cloud infrastructure based on Contrail, where we have hosted a variety of different applications, and we have customers doing transition from the traditional world to the new world in terms of delivering services through a virtualized or a containerized infrastructure. We are in a pole position to actually see those evolution because we have a telco cloud infrastructure, and we are closely watching this and looking at what are the new applications which are coming on 5G, which can help us in terms of looking at newer areas to monetize and expand. Those are the big areas. We're also watching, things like the evolution of, what's happening in Open RAN and stuff like that, because I think it has a part which is for transport. So wherever we can leverage the transport elements and access and aggregation through the evolution of anything which is open and disaggregated, it will be in our benefit. So those are some of the new opportunities.
Got it. You spoke about early next year for 400 gig. What's your best guess, I would say, or your best estimate of timing for 5G rollouts on your end?
As you know, some of the – go ahead. Was Ken going first?
Yeah.
Go ahead.
I'll jump on. So some of the stuff, as Manoj mentioned, is just an evolution. It's like security. You're seeing some early successes even today on kind of getting ready for 5G. On the telco cloud side, similar, success within Contrail. We're seeing some of that in kind of readiness for 5G. From a true kind of capacity demand, traditional routing, core and edge routing capacity build, we think that's more of a, late 21, even 22 story. It's going to be we believe it's going to be a long cycle. It's going to happen. The question is, when and how steep is it? And our expectation is it's fairly elongated. It's going to be, it's going to be a nice tailwind for the industry for several years to come. But we don't expect it to be a kind of a big bang 1 year. We get a lot of traction. I think it's going to be spread over several years, kind of starting late next year and into 2022 from a capacity perspective.
Yeah. And Ken, do you view the routing opportunity also? So we in everything we discussed so far, it was about market evolution. It was about kind of growing because of certain initiatives and products that you're offering, et cetera. What about competitive landscape? Do you think there is an opportunity to gain share, whether it's from Huawei in Europe because of political pressure or whether it's versus your other incumbent vendors, Cisco and Alcatel?
Yeah, I think we have been talking mostly about product. One thing that I would like to note, is on the go-to-market side, right? So this diversification strategy. I would say that Juniper focused too long on the same use case, the same set of customers. This was, if I could rewind the clock 5-6 years ago, we would have started, transitioning more diversification earlier. We started that, call it 2 to 3 years ago. We're seeing some traction now, some successes there. Q1 we just had bookings growth in service provider, first time since 2017. So we are seeing the momentum change of our service provider business, and I give a lot of that credit to the go-to-market. Really, it's about more hunting mentality, more use cases within, our strong accounts, and as well as gaining more accounts. So we're seeing that traction pay off. So it's not just about product. There is a big go-to-market element that we're starting to see work for us, and we think that will continue to work for us going forward. We aren't, although we have, solid market share there, we have a lot of TAM to go after. We feel very good about our product. It's really about execution and sales, and we're seeing a lot of momentum and traction there at this point.
Got it. I have a question from the audience. The question is that you said in the past 400 gig design wins will be over the next couple of quarters. When will you have more visibility into it?
Yeah, so it's hard to predict because it really is in our customers' hands. We do expect there to be some early rollouts, in the early part of next year. Therefore, some of those architectural decisions and design wins, if you will happen in advance of that. So it could happen later this year. As far as our knowledge, obviously we are much more knowledgeable about where the customers are with our day-to-day interaction. But as far as how you guys are going to find out, I really believe it's going to be when it starts hitting the numbers, right? These companies typically don't do big press releases for design wins. It's going to be, we're going to know those, and we're going to start executing to those rollouts here, hopefully in the first half of next year, and you'll start to see the momentum and the business pick up.
Got it. I want to switch to switching, if I can play with the words. Discuss the switching market. If you had an unlimited budget, what would you need to invest in order to grow faster?
So, Manoj, I'll let you answer this because unlimited budget is probably a dream for you, but why don't you take that from a product perspective?
Let me start with, two aspects of the switching market, right? Number one is, if you look at the campus and the branch, there's an aspect of, there's a big market, roughly about $18 billion right now in TAM for that, wired and wireless market, going to about $20 billion in 3 years, like with about, high single-digit growth. So that's one market. Then there is the data center switching market, which across cloud, what I would call as the SaaS customers as well as enterprise customers, there is a significant market there across the mid-enterprise and the large enterprise also. So those are the two different markets we look at, right, from a switching perspective. So number one, let me just go into the campus and branch.
And Manoj, if you can speak a little bit louder or closer to the microphone.
Is this better?
Better, much better. Thanks.
So if you're, let's look at the campus switching market, both the wired and the wireless market. With the acquisition of Mist, it has really given us a fundamentally different approach to this market, right? If you look at the market growing at a steady pace of about 8%, year over year, and if you look at the cloud-managed part of the campus and branch, where it's cloud-delivered experience, proactive assurance, that part is actually growing at almost double the rate, right? So this is the opportunity in front of us in terms of switching, because with Mist, we fundamentally changed how customers are looking at campus and branch networks. It's all about the user experience. It's just not about the uptime anymore. Good enough is not good enough. You've got to be really up and providing the right sort of user experience. So with the Mist platform, we are able to provide that cloud-delivered simplicity in operations and networking and security across the campus and branch, and also now extending towards the home and micro branches in this new post-COVID world, right? That is the really powerful thing which we are able to, leverage with the Mist platform. And, if you look at the solution, it's actually differentiated based on a powerful cloud architecture, but also the power of the AI engine driven by Marvis, which gives the proactive support and the proactive problem solving and eventually a self-healing network. That is what is the opportunity in front of us. We started off with wireless. Now we're extending to wired. So, wired switching now is cloud managed for us. And we're adding security and the SRX product lines into it. And WAN assurance is also coming, in the later half of this year. So if you look at LAN, wireless, and WAN, all of it is going to be cloud managed with the Mist platform. So this is the power of, what we are trying to drive for the campus and in the WAN networks with the switching platform on that side. On the data center side, similarly, I think, we've been making investments on the high-end data center switching as well as the cloud data center switching, as you know, and we don't have a significant share, or actually we don't have much share at all in the cloud data center switching, but the new products will really help us start making forays into the data center switching in the cloud and hyperscale segments. But on the enterprise segment, we have actually expanded our portfolio further, and with a fabric, a EVP and VXLAN fabric, which is more automated, driven through Ansible scripts, we actually simplified how things can be done on the enterprise data center. So both these opportunities are pretty powerful for us, and we see significant growth in both of these opportunities.
So, Juniper is a hardcore engineering company, always been. The weakness was more in go-to-market when it comes to enterprise. You had certain segments like service providers that you addressed directly, and with enterprise, if I look back, 15 years back and 10 years back, this was a weaker point. Can you discuss your go-to-market strategy? I understand that the portfolio is more complete now to address the opportunities in the market. How did you evolve or change your go-to-market to exploit or to translate these opportunities, this great portfolio, into revenues?
Since the beginning of last year, 2019, I think we have undergone an enterprise transformation. We have put more feet on the street. We have put more investment in inside sales. The SDRs, making sure that there is a good demand generation pipeline driven by marketing. So we have increased our investment in sales and marketing specifically for enterprise. And that transformation has gone through, in the majority of it, and we're continuing to, add, the appropriate number of, sales and, marketing-related, resources to kind of drive that. So that is the big chunk of our go-to-market transformation, and we're already reaping the benefits of that. Our enterprise, numbers are, growing, year over year, and for the last 7 quarters or so, and I think we continue to do that. So I think that's the big change from Juniper, of before, which is predominantly technology-oriented company. We continue to retain the technology-orientedness and the product-orientedness, but we have added the go-to-market strength in terms of looking at how do we rinse and repeat much more, how do we make the repeatable motions happen for the enterprise, and drive more of the enterprise business. Ken, do you want to add anything more?
No, I would just summarize it by saying, our new leader, Marcus Jewell, really runs the function more as a science, data-driven, analytical, more traditional enterprise KPIs, et cetera. Whereas before we were more relationship-based, right? We had a lot of DNA and smaller number of customers, big accounts, more relationship-based selling. We've turned the enterprise to much more of a modern selling motion with modern tools, technologies, et cetera. And we're seeing that pay off. And it's been about a year and a half. I still think we have some more productivity gains ahead of us because a lot of the hiring happened last year. So getting those newer headcount up to full quota is an opportunity for us to continue to expand our enterprise business, which has been growing for the last 3 years, right? Enterprise, the vertical of enterprise has been a growth vertical for us. We expect to actually do better than market. The uncertainty in our number right now has to do with COVID, right? So the market uncertainty is real. However, we expect to outperform the market due to the strength of our product as well as the investment we made in go-to-market.
I'm going to we ran out of time, but I'm going to take 1 minute from the break. Ken, if you don't mind, or Manoj, if you don't mind to discuss just briefly the key points of your security strategies, just for completeness.
Yeah, I think our security strategy, if there is a one-liner to describe it, it's a connected security strategy. So what I mean by that is that our approach is basically have visibility across the network. When we say across the network, cloud, get visibility of what's happening there, and analyze that in terms of what that encompasses. Add third-party intel information on top of it, and then take that intel information and spread it across not just our firewalls. When I say firewalls, our physical SRX routers, virtual SRX routers, and containerized SRX routers all the way in the cloud. It's not just that, but also across our networking devices, which includes our MX routers in our service provider networks. It includes our campus switches and the Mist platform in the campus side. So it's basically getting the intelligence and first of all getting the visibility, analyzing it and finding the threat aspects of it, and then leveraging that to actually enforce on our routers and switches and security devices. That's the over-encompassing strategy for security. So it's a connected security strategy for us.
Perfect. Unfortunately, we ran out of time. It looks like this is just a preview for a 2-hour call, but thanks very much for attending or coming on our call. For the investors, we published extensively on a lot of the topics we discussed here. If you have any questions, please don't hesitate to give me a call or send me an email. Have a great day.
Great. Thank you, Tal. Thanks, everybody. Thanks. Bye-bye.